All right. Sources of records and books of prime entry. There are different types of source documents whenever business transaction takes place, uh, which includes sales, purchases, receiving or paying money, receiving or paying money, or owing or being owed money. That means owing or being owed money. That means either you have to pay or receive money from a third party or to third party. It is usual for the transactions to be recorded on a document. All right, and these documents are the source of information recorded by a business. All right, a document used to record the business transaction in the book of account of the business include the following. All right, so let me repeat it for you guys. Yeah, documents used to record. So the document used to record the business transaction in the book of accounts of the business include the following: the quotation, the purchase orders, the sales orders, the good received note, the invoice, the statement, the credit note, the debit note, the remittance advice, and the receipt. Alright, now let me describe them in detail for you guys. Okay, first is quotation, a document sent to the customer by the company stating the fixed price that would be charged to produce or deliver goods or services. Alright, quotations tend to be used when businesses do not have a standard listing of prices of products. For example, when the time, materials, and skills required for each job vary according to the customer needs. Quotations can't be changed once they have been accepted by the customer. Next, we have purchase order. Um, Purchase order, a document of the company that details goods or services which the company wishes to purchase from another company. Avoid copies. Two copies of the purchase order are often made. Alright, one is sent to the company from which the goods or services will be purchased, and the other is kept internally in the organization, so the company can keep track of its orders, that how many orders they have uh, produced in a year on a period. All right, purchase orders are often sequentially numbered. So far so good. Next we have sales order. Sales order, a document of the company that details an order for placed by a customer for goods or services. The customer may have sent a purchase order to the company from which the company will then generate a sale order. Sales orders are usually sequentially numbered so that the company can keep track of order placed by customers. Next, we have goods received note. Goods dispatch note, a document of the company that lists the goods that the company has sent out to the customer. The company will keep a record of good dispatch notes in case of any queries by the customer about the goods sent. The customer will compare the good dispatch note to the what they receive at the time of delivery, so that they can make sure that the received goods, all the items lifted has been delivered and are the right specification. All right, for example, you have ordered a dress. All right, so you will compare with your order That is it the same or the different one? Statements, a document sent out by a supplier to a customer listing the transactions on the customer account, including all invoices and credit notes issued and all payments received from the customer. All right, the statement is a very useful document as it allows the customer to reconcile, to match the amount that they believe that they has to pay to the supplier to the amount supplier believe that they are owed, that they has to receive from the customer. Any differences can be asked by each other, the supplier and the customer. Hope you get it. A document sent by a supplier to a customer in respects of goods returned, that means the goods which customers wants to return. In this case, a document will be sent by a supplier to a customer in respects of the goods returns done by the customer, or the overpayments made by the customer if happens. All right, so it is a negative invoice actually. For example, uh, these are the goods, right? And these are defective. So customer said that, dude, I want to return them. So customer wants to return them. So in return, what supplier will do? Supplier will issue credit note uh, in exchange of these return goods. All right. Similarly, uh, credit note will also be issued if, for example, the actual bill was 1000. All right, but customer paid 1100, for example. So in case of overpayment as well, the credit note will be issued. All right, hopefully you got it. All right, a debit note, a document sent by a customer to a supplier in respect of goods return or an overpayment made. It is a formal request for the supplier to issue a credit note, as I gave you the example earlier. All right, this is a defected good. All right, and customer wants to return it to supplier back. All right, so the request, the letter which he will issue for the return by the customer is debit note, and here supplier will issue a credit note. All right, same thing will happen if the overpayment is made by the customer. For example, customer has to owe, has to give 1000 to the supplier. All right, but mistakenly he paid 1100. So for request of over amount to pay back, he will issue the customer will issue the debit note, and supplier will issue a credit note. Hope you got it. So remittance advices are documents sent to a supplier with a payment detailing which invoices are being paid and which credit notes offset. All right. Remittance advice allows supplier to update the customer records. Right. For example, supplier can update. Supplier can update that X invoice is paid. All right. X, for example, y unpaid, y is unpaid, x is paid. It also confirms that amounts being paid, so that if there is any discrepancies, any issues, they can easily identify it and investigate that. Okay, receipt, a document confirming confirmation that a payment has been received. All right, and this is usually in respect of cash sales actually. All right, when you will when they will made a cash sale. All right, example, received from a cash register. All right, that for example, you'll buy something from the supermarket, they will give you a receipt that actually they have a receipt which will acknowledge that they have received the money, all right, and you paid them, all right. Invoices, and invoices relates to a sales order or a purchase order. Okay, when a business sells goods or services on a credit to a customer, it sends out an invoice. All right, it sends out an invoice, and the details of the invoice should match the details on the sales order. All right, here, for example, here's the invoice. They said that they give the product A for XYZ amount, they give the product for B for XYZ amount, and product C for XYZ amount. And here is the sales order which has been sent by the customer to us. All right, so the A, B, and C, they should match with each other. All right, to make sure that they actually send the goods which has been ordered by the customer. Uh, and in the same way, when the business buys goods or services on credit, it receives an invoice from the supplier. The details on the invoice should match the details on the purchase order. So I hope you got it. See you in the next video to continue this chapter.